Hello and welcome to Saving to Live. I am Shay, and today's Ally Invest video is going to talk to you about market orders. So currently, Ally only has about four, I think it's 4 or 5 market orders types. If you wanted to make an order right here for Build-A-Bear, for instance, you will go to Quick Trade and you will put in all the information you see here. And then if you go down here, you will see learn more about order types. You can always go here to look at the information regarding these 4 order types here, but I'm going to go a little bit more in depth. All right, so the number one thing most people done, which I did myself as a new investor, I will always call myself a new beginner investor because I don't know everything, is a market order. And a market order is an order to buy or sell a security immediately. This type of order guarantees that the order will be executed, but it does not guarantee the execution price. So a market order generally will execute at or near the current bid for a sell order or ask for a buy order. So just always remember, if you wanted to buy this stock, even though it's trading for $4.57, they are saying you will pay $4.60. If you wanted to sell this stock and you see that, okay, currently is at 457, they're going to sell it for 440. Keep in mind that bid is to sell and ask is to buy. So you must have however many shares you want price wise times this number to own it in your account to buy it. Just keep that in mind. Now to make that trade, come over here to Quick Trade and you will see we have it here, and then you will go to buy, quantity, order type, market. Keep that here, but the other ones are here as well, and the duration. But you will click on preview and then you will get this page here, and then you will click place trade. There you go. And then based upon what the market is doing right now, you will get all these different pop-ups on the side of the screen letting you know the status of your order, and then it will be filled, and then you will be able to see if it was actually filled at 460. Maybe it went down to 459, so maybe you're paying a little bit less. But if the stock went up, then you're paying a little bit more. Again, it can guarantee you that it will happen that day, just not how much, because you're trading during a live market. Everything's always moving. Now, moving on to the second one, which is limit orders. So, use limit orders to protect ourselves from sudden spikes in stock prices. So, you use limit orders to protect from also sudden dips in stock prices. The opposite of a limit order is a market order. So, a limit order is visible to the market and instructs the broker, which will be Ally, to fill our buy or sell order at a specific price or better. So, if you want to buy or sell a stock, you will set a limit on your order that is outside daily price fluctuations. So, you need to ensure the limit price is set at a point at which you or I can live with the outcome, whether it's a good outcome or a bad outcome. Limit orders are very risky at times, especially if you set a limit order and just never watches it again. This is one of those things where you have to keep an eye out, because any type of market move in the negative can greatly affect you because you just set it and forget it. And you can't do that with a limit order. So either way, you have some control over the price you pay or receive. So just to give you an idea, I like to check out I think it's called Investopia and The Balance. These places give you a breakdown of how you can actually look at these different limits and trading overall. So for an example, let's say you want to buy 100 shares of a stock with the ticker XYZ, and the maximum price you want to pay per share is $33.45. In that case, you'll set a limit buy order, and you would express it like this. You want to buy 100 shares of XYZ for $33.45. This order will tell the market that you will buy 100 shares of XYZ, but under no circumstance will you pay more than $33.45 per share. So again, they're not absolute, and your limit order to buy that at 33.45 per share won't be filled above that price. But it can be filled below that price, and that's a good thing because you're actually going to be getting that stock for lesser than what it is being traded for at that second when you put in the limit order. So if you know you want to do a lot of research on different stocks, but you want this one and you know that it's going to be going up and down all day, but you want it for less than 33.45, you will put in that limit order to say, "Hey, market, me over here, I want this stock, but only when it's less than this price." Then the market will know, your alley would know, okay, we got to fill this order when it's less than 33.45 per share. But on the other hand, if the price goes up and the limit isn't reached, it won't be executed, and the cash for that will remain in your account. So you pretty much will have to have like a reserve. They'll put a reserve on those funds, so that it can be executed if it does reach that point. So you have to keep in mind as well, hey, if I'm going to put it in a limit order for this stock, that is going to be taking away or putting a hold on this amount of money for however many shares I want it to do for this price. Also, I will put the link to this in the description box. And while you're down there, make sure you hit that subscribe button so that you can help grow my channel and I can bring you more Allie Invest videos. So to see that done in real life, currently right here we see Build-A-Bear is at currently 457. They have an ask of 460. I'm going to go over here to Quick Trade, BBW. There we go. All right, so let's go to limits, 457. Leave it at day. All right, yeah, there we go. Build-A-Bear. So this is the right ticker now. Got the whole ticker in there. Everything's good. So this is what that would do, and it's saying good for the day. So once the end of today's trading day goes away, this all goes away. It cancels out, and whatever funds, the value you needed to make that purchase will stay inside of your account. It will not be used at all because this was never filled, and that's what the actual limit is. Now we're going to talk about a stop order. A sell stop order is nothing but a stop order. It just has extra word to it and is used when you are selling. It is much different than a limit order, and I will explain the difference between the two with the help from Investopia. Um, and it includes a stop price that when triggered the allowance of a market order. So sell stop orders, aka stop order, have a specific stop price. If the stock market price moves to the stop price, then a market order to sell is triggered. So with a limit order, hey, Atlee Invest over here, I want to buy Build-A-Bear at 457. You see me? Okay. They can see me over here saying I want to buy that. With a stop order, they can't see nothing until it's actually triggered. So it's like a blind trade that's transpiring with the market. Only until it actually is executed will it be seen by Allie. Only at that moment. A stop order, as I just stated, is invisible, and it will activate a market order once a stop price has been met. A stop order, however, not however, but it avoids the risk of no fills or partial fills. So I've had trades transpire where I want to buy 100 shares of something. So say I want to buy 100 shares of Build-A-Bear. Instead of it executing all 100 shares, I will get maybe 50 now and maybe 25 later, and the other half is not there. This is what partial fills means, and no fills meaning and no stocks are available for me to receive from the actual order. But because it is a market order, you may have your order filled at a price much worse than what you were expecting. Also keep in mind that once the future price is available of whatever the stop order is, it will be triggered. But depending on its type, the broker, aka Ally, will execute them differently based upon those different types. That's something that I learned myself. But I feel like because I'm doing a simple order, it should be executed. But I don't know uh, what their line of execution is. What if my simple one is not number one and number three? That's something that, the broker, aka Ally, would actually do. Right now, my shares are down 4.08%. What I normally would do is when I purchase a stock, say for instance Apple, and I really am not looking to be inside of this ownership of them for a long period of time, I'm looking for some kind of quick gain or whatever, I would immediately put a stop order in, and this will allow me to avoid going down in price however much I see fit. Put in a stop order, which will trigger the market to sell my shares if the price fell to a point where I didn't want to lose or I was not comfortable at losing. So initially, when I purchased these shares, I would have had sold them a long time ago because I don't like to be at a 4% loss if I'm not really looking to be with this company for a long time. Like everybody loves Apple. I'm not that big a fan. I don't even own an Apple. But I know that it's a lot of talk about these cars in the future for Apple, and I was like, you know what? Let's just buy it. And I just kept it there versus doing my normal, which is when I bought it, coming over here, doing a sell, and then going to stop, and then based upon the actual price that I purchased it for, I would put a stop order maybe for like 50 cents less, 25-cent less, or maybe a dollar if I really just knew the stock always went up and down a certain point. What price I choose for the stop really depends upon this market. So what I would do is come over here to the actual performance, and based upon me wanting to buy it, Apple has been all over the place. So it's kind of hard to dictate how far down I'm willing to go before selling, because I would need to be with them for a while, honestly, in order to really, you know, get back what I may have lost if it's a really big number. So I believe I purchased it initially for like 135 and it's now at 131. What I would have had done was put a stop order in for if it had dropped to 134, immediately sell. So I would be able to live with losing a dollar per share versus now it's all the way down here at 131, and it was earlier at 127. Now I have to actually wait, or I can put in another type of order so that when it does rise back up to what a price I originally had paid and hopefully a little bit more, I can recoup all that has been lost so far by owning the stock and maybe get a little bit of a profit because I did hold out on it. So that's why having a stop order would be the best play when you are purchasing stock and you are timid, scared about what's going to transpire, you're not really sure, you would buy it, then immediately go and do a actual stop.